Lesson 5. Baby Jack's having a turn on this one. Right, you're going to need to remember gross profit, and your new one is going to be net profit. Remember the formula for gross profit, which is turnover or revenue minus cost of sales. And your new one, net profit, is gross profit minus expenditure. So you see, in order to work out net profit, you actually need to know the other one too. Right, what this lesson is about, it's about net profit. It's about calculating net profit, and it's about understanding the relationship between gross profit, which we've covered in the earlier lessons, and net profit. So you are completely using all the information from the earlier lessons. You're directly using expenses, and now we're going to actually work out what we do next to complete the statement of financial position. Question 1. Calculate the monthly gross profit and monthly net profit for Felicity's Fabulous Florist. Hopefully you picked up the clues with the size of Baby Jack. The big Baby Jack is gross profit, and the little Baby Jack is net profit. Gross profit. Turnover. Now you have the turnover number. It's in the dark red. And you've got to minus the cost of sales, which is in the pale red. Two numbers you've got to deal with. Net profit. Net profit is gross profit, so you need that first number minus expenditure. Now, because Baby Jack's having a bit of a soft moment, he's actually made sure that the numbers are coloured in a pink colour for you to add up. So you need to make sure you take the gross profit and minus the total number of expenditure, and that'll give you your net profit. Question 2. In the above table, one of the items is identified as turnover, that one at the top in the dark red. What would contribute to the turnover of a florist shop? Now here you've got to remember what the formula is for turnover. You remember price times quantity sold. So there are two things that could influence the change of turnover. Please explain how a change in either of those two things, or for more points, a change in both of those things can contribute to the change of a turnover. Question 3. Explain the difference between gross profit, remember that's the one which is turnover minus cost of sales, and net profit, which is gross profit minus expenditure. Think about it. Think about the things you've taken away from gross profit and then the things you've taken away from net profit. What are you actually left with when it comes to net profit? What have you still got included when you're actually looking at gross profit? Final question. Now you understand the terms fixed and variable cost. Explain the benefit of why businesses should keep their expenses low if their costs of goods sold are high. So let's pause and have a think a moment. If the costs of goods sold are high, then you have to take that away from revenue, and then the gross profit is your answer. So if you've got one item that's quite high, that means gross profit's going to be negatively impacted. So you've got a lower number for gross profit. Right, we've got that answer. Now the second half of the financial position is we've got expenses. By deducting a high amount of expenses from gross profit, what's going to happen to net profit? So it goes back to the question, why should a business keep their expenses low if they have a cost of goods sold high?